Welcome back to Let's Invest with the ASX. In this video, we will talk about buying and selling shares, stockbrokers, the trading process, CHESS statements and dividends. Let's start with stockbrokers. Only authorized market participants can buy and sell shares on the ASX. To buy shares on the share market, you need a stockbroker to act on your behalf. Online trading means there are many brokers offering services over the internet. Stockbrokers are legally obligated to account for the financial situation and investment objectives of their individual client investors. They charge brokerage fees for transactions. Some firms focus on institutional business and major fund managers. Others cater to private investors. Things that you should consider when deciding on a broker include the price of brokerage and whether or not the firm will provide you with investment advice. Larger firms have large numbers of staff preparing reports and analysis. Smaller firms may offer a more personalized service. Discount and internet stockbroking firms offer trading services only, without providing advice, and often have discounted or flat-rate brokerage fees. These firms provide platforms for placing orders and monitoring portfolios, granting easy access to live prices, research, and market commentaries. Investors are responsible for conducting their own research and making their own decisions. On the other hand, full-service firms offer advice and guidance, requiring investors to provide personal information such as income details, capital growth objectives, security, liquidity, readiness, time frames, and risk appetite to receive appropriate recommendations. Finding a broker. The ASX has a stockbroker referral service. Their website also has a Find a Broker service. It is important to ensure that your broker is a participant in the market, meaning they fall under the direct supervision of regulatory bodies such as ASX, Australian Securities Exchange, and ASIC, Australian Securities and Investments Commission. If a business is not a participant, they must go through a participant to place orders into the market. It is recommended to verify the status of any party you do business with, as certain compensation plans may only be available to clients of participants. When it comes to buying and selling shares, stockbrokers handle the majority of the process. After a trade is executed, you will receive a contract note from your stockbroker, which is a written confirmation of the transaction's details. Additionally, you will receive a holding statement from each company's subregister, summarizing the securities you hold. The ASX issues CHESS holding statements, serving as reliable confirmation of changes to your CHESS holding information. These statements are issued at the end of the month if there has been a change in the holding balance. CHESS, which stands for Clearinghouse Electronic Subregister System, is used by the ASX to coordinate share settlement and maintain electronic records of transactions. Physical records are typically sent 1 month after the transaction. The process of buying shares involves instructing your advisor to make the purchase, the designated trading representative entering the buy order into the market matching the order and executing the trade, and the stockbroking firm sending you a contract note. Once you receive the contract note, you will proceed to make the payment to the stockbroking firm. For selling shares, you instruct your advisor to sell, the designated trading representative enters the sell order into the market matches the order and executes the trade, and the stockbroking firm sends you a contract note. To permit the transfer, you provide access to your holder identification number, HIN, or security reference number, SRN. The settlement process involves electronic transfer of shares from the selling broker to the buying broker, with CHESS notifying the share registry. The share registry then updates ownership details and issues holding statements to the buyer and seller. During the buying and selling process, funds are transferred between stockbrokers through CHESS. Once you have established an account with a full-service broker, you can place orders by contacting them directly. Your stockbroker will provide you with an invoice for the transaction at a later stage. It is advisable to request information such as the current market price, the number of buyers and sellers, and how the market has performed throughout the day from your broker to stay informed. When trading with an online broker, the process typically involves registering with the broker, and setting up a cash management account, direct debit, or credit facility linked to a bank account. To buy or sell shares, you need to use the ASX code to identify the specific shares, specify the quantity you wish to trade, and enter the desired buy or sell price before executing the trade. The trading process starts with placing an order, which is then entered into the market by your broker. When two orders match, the system compares the buying and selling orders and automatically executes trades based on strict price-time priority. After the trade is executed, your stockbroking firm will send you a contract note containing information about the transaction. It is important to keep each contract note for your tax records and double-check the following information: the name of the business, the type of shares traded, the price at which the shares were transacted, and the brokerage fees incurred. By maintaining accurate records of contract notes and associated information, you can ensure proper tax reporting and have a comprehensive overview of your trading activities. When purchasing shares, it is important to note that payment must be made within 3 business days of the transaction, following the T+3 system. The cost of your shares includes the price of the shares themselves and the brokerage fees charged by the stockbroking business. Additionally, when selling shares, brokerage fees will also apply. Brokerage fees vary between firms, and higher fees are often associated with additional support and research functions provided by full-service brokers. Fees may be negotiable based on the scale of business you provide. Different types of brokers have different fee structures. Full-service brokers. These brokers offer a wide range of services, including investment advice, research reports, and trade execution. They typically charge a percentage of the assets under management, AUM, or a commission per trade. Discount brokers. These brokers offer fewer services compared to full-service brokers and may not provide investment advice. They usually charge a flat fee per trade, which can vary depending on the broker and the type of trade. Robo-advisors. Robo-advisors are automated investment platforms that use algorithms to provide investment advice and manage portfolios. They typically charge a percentage of AUM. Online brokers. Online brokers provide an online platform for investors to buy and sell securities. They typically charge a flat fee per trade, which may vary based on the broker. It's important to consider the fee structure and services offered by different brokers to choose the one that aligns with your investment needs and preferences. When completing share market transactions, the settlement process is handled by your broker. Settlement involves the exchange of legal ownership of the financial product for money. It occurs automatically 3 business days after a trade takes place, with the CHESS Clearinghouse electronic sub-register system handling the payment and legal ownership transfer simultaneously. During settlement, 2 processes take place. Payment. The buyer electronically transfers the payment for the trade to the seller. Legal ownership transfer. The seller transfers the legal ownership of the shares to the buyer. This simultaneous payment and ownership transfer process is known as delivery versus payment (DVP). Settlement is managed by a settlement participant, which can be your broker or an agent contracted by them. Subregisters. Subregisters can be classified into 2 types: broker-sponsored and issuer-sponsored. In a broker-sponsored subregister, your shares are held on the CHESS subregister. This allows you to consolidate your holdings into one broker-sponsored account, making it easier to track your investments. It's important to remember that when your shares are broker-sponsored, you must trade through that specific broker. Alternatively, in an issuer-sponsored subregister, your shares are kept on a subregister sponsored by the issuer of the shares you purchased. This allows you to easily trade through any broker, but you will have a separate issuer-sponsored holding for each shareholding. It's also possible to switch shares from being broker-sponsored to issuer-sponsored, or vice versa, as well as from being sponsored by one broker to being sponsored by a different broker. HINs and SRNs are account numbers that identify your shareholdings. HIN stands for Holder Identification Number. It is a unique identification number assigned to investors who hold shares in electronic form within the Australian Securities Exchange (ASX) system. If you opt for broker sponsorship, each sponsoring broker will provide you with a distinct HIN. Therefore, your HIN may differ depending on the broker you use. On the other hand, SRN stands for Security Holder Reference Number. It is a unique identification number assigned to investors who hold shares in a company that sponsors the shares within the ASX system. If you choose issuer sponsorship, you will receive an SRN for each holding you nominate as issuer sponsored. To summarize, HINs are associated with shares held in the CHESS-sponsored subregister, while SRNs are associated with shares held in the issuer-sponsored subregister. The choice between HIN and SRN depends on whether you opt for broker sponsorship or issuer sponsorship for your shareholdings. Share registries. Share registries play a crucial role in managing a company's share register, which consists of both the CHESS-sponsored and issuer-sponsored subregisters. The share registry is responsible for overseeing the share register and handling most interactions between shareholders and the company. When you become a shareholder, the registry will request your banking details in order to facilitate dividend payments directly into your bank account. Additionally, the share registry provides important shareholder reports and voting forms for significant matters concerning the company. Their website often offers online services to manage various tasks, although certain actions, such as changing your address, may require written confirmation. Depending on the number of companies and registries involved, shareholders may have dealings with multiple or only a few share registries. It is important to engage with the specific share registry associated with each company in which you hold shares to ensure effective communication and proper management of your holdings. Changing brokers. Changing stockbrokers is a straightforward process from a settlement administration perspective. To change brokers with issuer-sponsored shares, you need to complete a new client agreement form and provide personal and financial details along with the relevant SIN to your new broker. Changing broker sponsors with a HIN is possible, but there may be a fee involved. Contact your broker or ASX customer service for more information. CHESS statement. Securities of over 2,000 businesses are held on CHESS. It's an electronic transfer and settlement system. Each time you trade shares involving a CHESS holding, you will be provided with a CHESS holding statement that verifies the transaction. When you buy or sell shares involving an issuer-sponsored holding, you will receive an issuer-sponsored holding statement. CHESS issues holding statements to uncertificated shareholders who are sponsored by brokers or institutions participating in CHESS on behalf of the companies. A separate statement is issued for each security held in CHESS. The holding statement issued by CHESS on behalf of companies includes the following information: company name and logo, your name and address registered in CHESS, security related to the statement, date of transaction recorded in your CHESS holding, description of the transaction, transaction ID as a supplementary reference for inquiries, important messages in the information section, details of your CHESS sponsor, the primary point of contact for queries, your holder identification number, which is unique to your CHESS account and should be kept confidential. Your security balance after the transaction is adjusted, the number of units that will affect your balance, the ex-account status, indicating whether the transaction occurred during the ex-dividend or cum dividend period. A statement is issued whenever the holding balance of a security has been altered by a transaction during the month. To be entitled to a dividend, you must purchase a share before the ex-dividend date. The amount of the dividend can be affected by the length of time you have owned the shares, depending on the company's dividend policy and the type of dividend being paid. In some cases, the company may require shareholders to hold the shares for a certain period before becoming eligible for a dividend payment. If you purchase shares just a few days before the dividend payment date, you will typically receive the full dividend amount. However, the share price may adjust to reflect the dividend payment, resulting in a decrease in the share price. This adjustment occurs on the ex-dividend date, which is the date after which a buyer of the shares is not entitled to receive the upcoming dividend payment. Thanks for watching. Check out our flashcards to reinforce your learning. Don't forget to like and subscribe for more valuable content.